Hello, my name is Anthony Doyle and I'm the Chief Investment Strategist at Pinnacle Investment Management Group. At Pinnacle, we have 18 affiliated boutique investment managers that manage funds across a wide range of asset classes, such as fixed income and bonds, right through to Australian and global equities. So in terms of what I discussed today, what I was looking at were the significant tailwinds that exist from a macroeconomic perspective that are likely to support equity markets moving higher over the next 12 to 18 months. So whilst bearishness is a business model, and typically news media and financial media will lead with very negative headlines and bearish headlines, I actually think there are some really good reasons to invest in equity markets today, both in Australia and internationally. Firstly, we know that interest rates are coming down, and they're coming down around the world. And the reason that they're coming down is because inflation expectations have fallen. Not only is the oil price around 10% lower than where it was a year ago, but supply chains have been re-established, and this has allowed central banks to reduce interest rates from those very restrictive levels. So when interest rates are falling, this generally supports valuations for asset classes like equity markets. And that's why we've seen, really since Liberation Day, the equity market continue to grind higher on the back of very positive earnings growth, particularly from US tech and mega caps. Now, interestingly, we are seeing that those gains are broadening out. So smaller companies, smaller market cap companies are doing particularly well, both in Australia and internationally as well. Now, when I have an environment of interest rates falling, low interest rates, and government spending that is very strong, both here in Australia and offshore in the US, such as the One Big Beautiful Bill implementation, and also in Europe with increased spending on defense, for an example, what we typically see is that equity markets continue to rise for the next 12 to 18 months. So there are several significant tailwinds that exist that will likely see markets continue to rise in the future. Now, I don't want to sound Pollyannish. Certainly there are risks that exist in the macroeconomic environment today. And it really comes back to the hallmarks of modern portfolio theory and your views as an investor. What is the most appropriate way to diversify your assets in the scenarios where you do have a pickup in volatility and uncertainty? And most importantly, if you want to generate excellent long-term total returns in the fullness of time, take a long-term view. In my experience, the best way to generate those returns that you seek from your hard-earned savings and investments is to allocate to a forward-looking, active investment management fund. Because certainly, we know that uncertainty has risen, and we know that the next 10 years will look very different to the past decade. And that's why I'm advocating an active fund management approach. You can do this online via NabTrade, via a number of active ETFs under the Pinnacle umbrella, and with our boutiques that I mentioned earlier. Thank you very much for your time, and I'll see you next time.